One of my favorite benefits is having the cat behind me. Kitty! One of the reasons why I love real estate is the potential tax benefits. If you structure your property right, you could potentially save tens of thousands of dollars in tax savings. Tax season is just around the corner. Today we are going to talk about all the deductions you could take as a result of owning real estate. So first I'm going to talk about deductions around your primary residence. If you live in a home that you buy as a primary residence, make sure you calculate the cumulative mortgage interest rates you have paid at the end of the year, as well as the property tax you have paid at the end of the year, because those two items can be deductible against your income tax. So make sure you have the numbers ready for your CPA or have the numbers ready when you use the tax filing software. And if you are a homeowner who have used a portion of your home as a home office, and the home office is defined as that's the primary area where you conduct your business, and it actually has a bedroom where you can close behind. If you have such a space where you conduct your full-time job and it's dedicated for your business use, anything that's associated with that home office can be deductible. Just make sure that you have a good idea what your utility bills is like, which includes gas, water, electric, sewer, internet, cable bills, as well as homeowners insurance, and any improvement that you have made to make your home office possible for conducting your business. We're talking about furniture purchases, we're talking about software, computer equipment, lightings, or any painting or any home improvements you made to make that office a possibility. Make sure you have all those numbers ready, because those are your deductions as a home office. So effectively, if you have a space that you use, a lot of your ordinary expenses that you have for your household could be deducted. Usually how that works is that the area of the office, make sure you know what is the percentage compared to the overall home. For example, a bedroom is typically maybe 10 to 15% of the overall square footage. So you could deduct 10 to 15% of your overall bills that's associated with keeping your home as a business deduction. So make sure you take advantage of that. And also, you could, if you have a cleaner, a gardener, those are also deductible for your home office. So make sure you take advantage of that. We have just come out of the pandemic and a lot of people still work from home. Those expenses are easy to ignore and easy to left behind. If you add all those numbers up, that could actually save you quite a bit when it comes to your income taxes. So make sure you don't leave those items out when you file your taxes. Okay. Now we're going to shift gear to if you own investment property, and that's really the part that I'm most excited about. I personally have owned many investment properties. I'm doing a better job bookkeeping all my expenses because there's a tremendous number of items that I could deduct from the ordinary income that I collect from rental in those properties. Not only my mortgage, the whole piece of mortgage, including principal and interest, can be deducted. It's tax deductible, as well as property tax, and all the utilities and all the improvements I've made are deductible against the income on my income properties. Any property management fees that you might have, cost of maintaining and repair your property can be deductible, as well as advertising costs, fees that you pay to find renters, mileage and gas that you have to and from your rental property just to manage and conduct showings. Those are also deductible. Also photographer, any of the maintenance that goes into maintaining and managing your property can be tax deductible. So we're talking about a lot of things that can be deductible. So make sure you don't leave anything behind. Technically, if you own a rental property, you should be more or less running at a loss, because if you add those expenses as well as property depreciation. So make sure you capture any and every expense item that goes into maintaining, managing, leasing activities that are associated with your rental properties. So now let's talk about home depreciation, which is a huge chunk that you want to make sure you capture at the year-end tax filing. So that's my cat, Latte. He likes to be part of the video. Home depreciation is the value of the structure. So typically in the Bay Area, homes are typically $1.1 million to $2 million. And the structure is usually somewhere between 50 to 60% of the value. You could look it up on your tax bill. It will tell you what the structure is assessed at. And that assessed value divided over 27 and a half years is your home depreciation. Okay, all right, you need to go down there. Let's take my property for example. On the assessor's record, that the structure of my home is worth about $600,000. So every year I'm able to take a home depreciation of $21,000. So that's $21,000 I could write off as my expense in depreciation. So $21,000 in home depreciation plus all the expenses that I have if this were a rental property is my total expenses. And most of the time, if you add the depreciation, most of the property owners are operating their property at a loss. And that's the beauty of owning an investment property, is that you will be able to report a loss every year on your income tax. That could offset, maybe you have a W-2 income or other source of income that could offset the income or bring your taxable income down. You could have, as a result of owning the property, either as a primary residence of yours or investment property. I do have to have a disclaimer that I am not a certified accountant. I'm not a CPA. So if you have specific tax questions, make sure you defer to the advice of your CPA. Just sharing my experience as a property owner, all the deductions I've been able to take advantage of. If you have other questions, feel free to drop me a line. Now you know more about one of my favorite vehicles of investment, which is real estate. I want you to watch this video right here on how I made $1 million in real estate investment.